Hello and good afternoon to all of you. Once again, welcome to Digital Money 2020. Now we present you with the fireside chat on the secret ingredients to successful bank and non-bank partnerships. Welcome to Mr. Amol Dete, Editor, ET, BFSI, and Mr. Prashant Kumar, MD and CEO, Yes Bank. Dear delegates, please keep asking your questions in the chat box and we will pick a few at the end of this session. Over to both of you now. Mr. Amol, you are on mute.
Yes, thank you, Shreya, for that update. We are living in the world of network and virtual. So, a lot of things are also depends on technology and, the god of network. Well, thank you, Shreya, and thank you, PCI, in fact, IAMAI and FCI for inviting us at the Digital Money 2020. I have been seeing a lot of sessions and I have also seen the agenda. I think there are many interesting sessions that you guys have actually put up and there are relevant speakers from the industry. So thank you so much for inviting us as well. And, I'm sure the participants must be getting a lot of insights from all these sessions. So moving ahead, I'm really delighted to have Mr. Kumar, who is the MD and CEO of S Bank, and comes from a remarkable and a great experience with SBI and decades of experience in the banking sector. And in fact, the topic of today's discussion, the secret ingredients to a successful bank and non-bank partnership, sounds really cool in today's environment because the traditional banks are also moving ahead with the partnership model. Gone all those days when banks will do everything on their own. There are not only NBFCs but fintech startups, and everybody is actually heading towards the partnership model. So, Mr. Kumar, to start with, today's conversation, I would like you to, tell us. Recently, RBI has also allowed scheduled banks to do to have a partnerships with the NBFCs and housing finance companies. What are the secret ingredients for a successful partnership? Because we have seen a lot of partnerships coming up. So, how successful these partnerships could be, and how could they make this successful?
So, Amol, the fundamentally why even traditional banks are moving towards this ecosystem of partnership, I think the most important thing what the banks are seeing that there is a huge population which they have not been able to service.
Right.
Now, servicing this population in a brick and mortar would be very, very difficult. It would take a very long time, and this is also a very costly affair. Second thing, that because of the change in demographics and also with the availability of internet, I think from the customer side also, people are not willing to come to the brick and mortar branches. They would like to do the banking at their doorsteps at the time which is convenient to them. So I think this change in the behavior of the customers, the new customers, I think is something very, very important. And banks are realizing that unless they have a right kind of partnership, then getting those customers would be very costly, would be very difficult. And maybe the customers would not like to do that if the customers are having the other option. So I think this partnership, the most important part would be where everybody would see the value in this. It would not be at the cost of others. And I think that is exactly what is happening now. And that the banks are seeing a huge advantage of having a partnership with the fintechs and the NBFCs who are able to come out with the new solutions, which are quite convenient for the customers.
Sounds obviously interesting, Mr. Kumar. But the immediate question I have is, the traditional banks or even the large banks have their own policies and have their own structure of the due diligence and crafting the risk parameters, whereas the NBFCs and the fintechs will come with the different parameters. So how do you actually merge these risk parameters? Maybe you will approach one customer in a different manner, but ultimately you have to match the risk framework. So how do you do it at Yes Bank, and how the industry is doing it?
So I think from both the sides of the bank as well as either the fintechs or the NBFC, I think it is very, very important that everybody works in a broad framework set up by the regulator. That is one part. Second thing, that we also need to say move towards where we can merge the processes or the risk framework of the bank with those kind of NBFC. I just give you one typical example that the banks would lend to a NBFC, okay, but would not be comfortable in their loan origination process while going for a co-lending model. So I think this is a fundamental like conflict. Okay.
Right.
So if you find a NBFC good to like lend on the basis of their loan origination system, then what is wrong in say partnering with them for the co-origination? Only thing is you need to have your own risk appetite framework clearly spell out there. Similarly, on the fintech side, there are issues in terms of the KYC. So I think those are the issues which banks are trying to say resolve with the intervention of the regulator. Because from the regulatory perspective, also they are not they would not be never be in a position to say anticipate what are the changes brought in by the ecosystem by the banks or the fintechs. But once we are able to say come out with some of the those kind of things, it's very important we reach out to the regulator and seek their approval in changing the guidelines issued by them from time to time. So I think this is something which is very, very important.
So, yeah. So, Mr. Kumar, could you also add and explain me more about the partnerships that the Yes Bank has with NBFCs and the fintech companies, and also how much is actually it is helping in terms of a business? Are NBFCs and fintechs managing to get you the business which perhaps you could not have got otherwise?
So, Amol, like I would like to divide the overall banking into four different spaces. So I think so far the overall focus and the concentration was more in terms of doing the transaction. But the transaction banking is only one part. I think the more important thing would be in terms of a collaboration where the banks can acquire customers both on the liability side as well as on the loan side. And similarly, also coming out with those technology platforms where the customers can make their investment decision. Either it could be insurance policy, it could be a mutual fund. So I think that is something which is very important. Now, transaction banking, if you see, after the NPCI came with the UPI say, framework where all the banks are able to do the transaction. So I think most of us are able to take care of that part. Now, the next step is in terms of acquiring customers, where fintechs have started coming out with those kind of solutions. And I think this is exactly what banks are seeing, that maybe the number of customers which they were adding through their branches, brick and mortar branches, the fintechs are able to make that kind of addition maybe in few days, maybe in a month time, where the cost is very small and also it's very, very convenient for the customer. The issues are more in terms of whether it satisfies the regulatory framework. So I think this is something which we are working. So on the Yes Bank side, if you see, on the UPI, we are already in partnership with some of the payment, say, fintechs. And 40% of the UPI transaction in the entire country is being routed through Yes Bank. And today, like we need to remember, like it's more than 2 billion transaction on UPI. I think successive month, it was something around 2.38 billion. So 40% of that is going through the Yes Bank platform. So I think this partnership has been very, very successful with the payment bank. But I think the next partnership, which we are now talking to number of say fintechs and the NBFC, in terms of acquiring customers. So only yesterday, like we came out with our say vision in terms of say adding 1 lakh customers every month, and we would like to reach to a customer base of at least 1 crore in next 2 years. And this cannot happen only in organic growth. So we are looking for both organic and the inorganic growth. And I think the fintechs and the NBFCs would be really helping us in acquiring customers both on the liability and the loan side.
Mr. Kumar, you explained it really well, but I have a few thoughts, not a straightforward question. And let me put it in a manner. So even in last couple of years, large NBFCs have failed miserably, and they were like a risk to the system. at other side, banks also face a lot of challenges. Now, most of the banks are also looking at the partnerships with the same NBFC companies and all. Considering what went wrong in the past, will you be very cautious while partnering with every NBFC, each NBFC, and will you scrutinize your own policies before partnering with that NBFC, or will you also go and put a cap on XYZ amount of disbursal and will not disburse entire amount or something like that?
So, Amol, I think if you see like the mistakes or the problems which happened on the NBFC side, it was deviating from a fundamental model of a NBFC. I think the fundamental model of a NBFC was always to originate the loans, okay, and transfer it to the banks. So they should not keep on their balance sheet. But I think in the pursuit of getting more and more profits, and also sometimes of the greed, and when you deviate from the ethics and the normal principle of governance, people were trying to keep everything on their balance sheet, okay, and get the funding from the banks. And I think the whole problem started with that mindset, where the NBFCs originated with a growth of 35% to 40% every year, and try to keep everything on their balance sheet and getting the funding from the banks. So I think that was something which we need to avoid. And that's why the recent RBI framework in terms of co-origination of loan is something which is very, very good. And I think we need to work together on this. And Yes Bank, I think, is looking very, very aggressively to partner with the right kind of NBFCs where they have been able to raise those kind of loans successfully in the past, where the behavior of their loans is really good. And I think we would be doing that kind of partnership. But lending to NBFCs without even understanding what kind of portfolio they are building would be very risky. If the overall market is growing, say, 20%, and if a particular entity is growing at 40%, then definitely there is something wrong on this. So I think that
Right.
we need to be careful about that part.
I mean, yeah, exactly. Because RBI, though it said that you bank can partner with the systematically important NBFCs, but the
Yeah.
NBFCs that failed were also systematically important, right?
Yes. Yes.
You know,
Yeah.
so and considering the people's money, I have also started receiving questions from the audience, and I will start taking a few questions from them as well. I think this question sounds really interesting to me. So this question is: which areas do banking and non-banking partnerships have the most potential to grow?
So I think as on date, I would be saying if we can acquire customers. So Amol, if you remember during the Jan Dhan account things, so at that point of time, I think the banks were adding the customers
Hmm.
through their brick and mortar branches. There was hardly any digital offering. But today, like if you think like if you have to do the same exercise on a digital media, then I think you just see in terms of the convenience to customer, the speed with which all the banks can acquire customers, and also the convenience. I think if you remember, like the customers were visiting the bank branches, they were producing all their documents. And today you can just digitally open your account, you can do a video KYC, and you are having that Aadhaar card through which you can do the KYC completion. So I think such a country where you are having a population, huge population, and still like we are talking about large number of people don't have a bank account. So still we were talking at least one account per family. We are not talking about every citizen has their
Hmm.
individual account. So
Hmm.
I think this partnership I think would be the most important in terms of acquiring the customers. So I think that would should be the first step.
Okay, I think quite interesting, and thanks for that answer. I think participants are still asking some questions, but let me, get some more insights from you. When I look at the fintech model, yes, they have the great data analytics, and they analyze the risk on their own way. In fact, they're creating alternate credit score for the customers, right, which can be very good for the banks immediately. But that entire model is based from A to Z on a digital platform. My question, which comes from a traditional, background, is this: that what if the customer doesn't pay? Maybe the fintech has all the data in place, but if the customer doesn't pay, how will you recover? Because we have even the corporate cases where the corporate doesn't pay and they just slide, right?
So I think the experience from the individuals is much better than the behavior from the corporates, because from the corporate side it is with a particular objective. But I think when you are having large number of individual customers, your risk is also contained, risk is minimized, and if you have right kind of underwriting models and built on the data analytics, because data analytics also gives you the behavior, the prediction about the behavior of that customer. So I think if you have the right kind of inputs in terms of getting the credit score, in terms of their spending in the past, in terms of their cash flows in their account, and if you build that kind of underwriting model on the basis of all these inputs, the chances of going wrong, I'm not saying would not be there, but chances of going wrong would definitely come down drastically, and you can manage this. So I think any business, you definitely run with a kind of risk, but if you are able to control that risk, then I think it's a win-win situation.
Okay, I will take one more question from the participant. This is specifically technology oriented on open banking. And the question is, what are the prospects for open banking as a partnership for data sharing for providing more value to the customer while reducing risk and cost? Has India made any progress in this direction?
So I think it's a very interesting question, and I think this is a journey which all of us are moving in that part. So as of now, everybody is more concerned in terms of protecting the data about their customers and would not like to share with others. Just to think like, because if you share the data, there is a probability of that you lose the customer and you lose the business. But I think what we need to understand, that protecting a customer data for a very, very long time is not possible, because the same data would be available to other banks through different channels. So maybe this customer is doing some credit card transaction, making some investment. So howsoever you will try to protect that customer from the, say, your competitors, it would be available to them. So I think the best part would be in terms of how to improve your own products and the services. Okay. And definitely then the customer would be free to choose the best out of them. So at least my belief is that it will take some time, but let's make the customer, the entire process and the products centric to customer. Give them the best, and I think they would be able to take that kind of thing. And then in the process, everybody would grow, everybody would get the benefit.
Okay, interesting, Mr. Kumar. So, when at your end, I know that Yes Bank had many partnerships with, in fact, fintechs, new fintechs, emerging fintechs, and all. So, could you also give me a sense on what kind of partnerships are these? Are these partnerships specifically related to commission based? Are these partnerships related to fee based? I mean, how do you actually craft a business model?
So Amol, like there are two kind of things. One would be definitely partnership on the basis of fee, but that would be a very, very small amount. I think the larger interest which we are looking for is in terms of getting a customer, using that customer information within the bank in terms of how many more products you can sell it to the customer. Okay. So the entire partnership would be more in terms of the building the capabilities within the bank and also helping our partners. Okay. So today we are having a technology platforms where we would try to encourage like the companies who would be coming and plug and play kind of a structure. So it becomes very, very convenient for them to come out with the solutions and just to play with our system, okay, and get the benefit. We are also in the process of setting up a technology, say, innovation hub. And in the innovation hub, we would encourage people to come with the use cases and then come out with a multiple alternate solution. So we would encourage, like for every use case, if we are having 8 to 10 alternate solutions, and then we can evolve around them. So that both the fintech partners as well as the bank can do the experiment and offer the best thing to our customer. But this is a ever evolving situation. I think we would be never able to reach to a situation where we would be saying it's a perfect solution. So I think every time there would be say, something better than the previous one.
Right. There's one more interesting question that I have received from the participant, and this question is: are there any roadblocks, according to you, today that need to be addressed to provide an environment where partnerships in the payments ecosystem can flourish?
Kamal, as of now, what I am
Mhm.
seeing that today it is very, very convenient for like the people because the mindset has changed. If you see the earlier, everybody after completing the education, they were looking for some service at a good company. Now mindset has changed and people are going for the entrepreneurship. Now, in this pursuit of entrepreneurship, when there are so many enablers. Like you can set up your own technology team. Just you set up your own website just in a matter of few days, and then getting the necessary approval is also very easy. So there is a risk where large number of people thinking like this is something which everybody can make. So we are running into that kind of risk where large number of people would come out with some solutions, would think in terms of some business strategy, and then there is also a high risk of failure. Okay, so then the success rate would be small. So I think that should
Right.
not discourage the innovation. So I think that is something which is important. And in the process, I think that we also need to segregate between the players who are really serious into their business or the players who would like to make some quick money.
Mhm.
So I think that is something which we need to do.
Mhm.
But I think there is one more aspect in terms of getting the right kind of regulation around.
Mhm.
So it would be a two-way process where the regulator would seeing the developments in that area and come out proactively with the regulation. But I think at the same time, it's incumbent on all of us to reach out to the regulator, tell them like how are the situation, how are the solutions, and would request them to come out with the frame.
When I, look at now the banks, NBFCs, and fintechs, everybody's talking about the partnership model. You know, obviously banks and NBFCs earlier have their own islands, and they were happy with that. But as banks are coming with new technologies and the new emerging technologies. Most of the banks are also talking about BaaS, which is banking as a service. NBFCs are trying to do only one part of job. Fintechs are also trying to do some part of job. My question to you, sir, is: are we heading towards the only partnership model? And is the traditional banking over now? I mean, okay, this is a bank, it has hundreds of branches, and they used to do only this much thing. It's over now. Now this is a bank which has hundreds of partners, and they will do thousands of things. Is this the emerging model of the banks now?
So Amol, I think if we just think through this say issue in a different way. So I think as a say, ecosystem, partnership is something which always works well, other than a say individual or maybe a small group of people. So only thing is that we are now moving away from the partnership within bank to partnership outside the bank. So within the different business groups, I think we have seen that wherever there is a partnership within the different business group in a bank, that bank is more successful. Only thing is now we are moving out. We are seeking partnership outside also. So I think if the mindset is very clear in terms of it is not at the expense of others, it would be a win-win situation for others. And I am fully confident there is a lot of room available for this. So I think entire ecosystem give that kind of say potential uh, available to everybody that everybody can exist, everybody can make money, everybody can come out with innovation, and in the process, not only the entities but the customers would also get the benefit.
So, when you're talking about the emerging partnerships, apart from the typical fintech startups and, the non-bank, what are the maybe future partnerships that you can, tell us? In fact, few bankers told me they're also partnering with Swiggy and Zomato and Netflix and something like that, right? So, what is there on Yes Bank's radar? Who are the new partners that you are going to join?
So our thinking, Amol, is in terms of whether bank as such is a different kind of business. But I think we need to move away from this part. We would like to see banking as a part of the entire journey of the individual's life cycle. So I think banking should not be seen separate. What we are looking at, how we can integrate the banking part in the lifestyle of an individual. So banking would be a very small thing. So I think somebody is not going for banking. Somebody would be going for purchase of an item. Somebody is going to for going to do a creating wealth for future. Somebody is going to go for shopping. Some for leisure activity. And how banking can integrate at the right kind of say uh, I would be saying right kind of time space in their life cycle. So banking should not be seen as a banking. It should be more in terms of fulfillment of the goals of an individual. So I think we are at least in Yes Bank. I am very proud to say that our mindset is not like mindset of a banker. It is more about the mindset of a fintech company,
Right.
where we always see how we can fulfill the aspiration of an individual in the life cycle.
Hmm. So, I mean, the lifestyle aspect is a very, very important point, and I'm happy that even financial institutions are talking about it. But I also understand that Yes Bank is also looking at some partnerships with upcoming NUEs. So how important such models will be for you? At one side, you are very aggressive in terms of partnering with NBFC and fintechs for the credit system, but on the other side, you are also partnering with NUE. How important these partnerships will be for you?
So, Amol, on the NUE side, I think first all of us need to acknowledge that NPCI has played a very, very wonderful role in terms of integrating the entire payment space. But what exactly is happening that today, if you see the growth in the UPI payment space, I think there is a potential for existence of many such more companies who can be, say, playing into that space of the banking, transaction banking. Similarly, instead of having a plain transaction, I think there is also a scope available for a lot of innovation in this partnership. And that is exactly from the Yes Bank side what we are looking
Right.
at in terms of creating additional, say, agencies and
Hmm.
also in terms of bringing out the innovation. Okay. So, because if you see, UPI was a simple transaction, but a lot of innovation have happened around that, and new, very, very successful payment companies have come in. So I think what we are looking at, say, having a collaboration with the right kind of people, and that is exactly what we have done yesterday. That with the partnership with the
With
Soham
Soham.
Bharat,
Yes.
Soham
Yes.
Bharat, because I think our say thought process are entirely same,
Yeah.
and both of them can bring out those kind of innovation.
So, then the immediate question that comes to my mind is when the collaboration is in the right direction, when you find the integration with your new partners is really matching the way you wanted, will you consider acquiring such companies or investing heavily in such companies the way you invested 9.99% yesterday in Soham?
So Amol, what we are doing, we are coming out with our own policies in terms of how we can provide the financial support to the upcoming individuals or some of those entities who would be innovating and would be also collaborating with us. So I think we are coming out with our policy where we can start funding them in some small amount. But initially, our thought process is that the fintechs who would be complementing us in our function. Initially, we would try to identify them, fund them, nurture them, and take them together. So immediate target is not in terms of acquiring; it is more in terms of developing them, so that they can become a very, very important partner in the entire
Hmm.
ecosystem.
Okay, thank you, Mr. Kumar. But before I wrap up, I would like to take one question specifically about Yes Bank. Obviously, we had a adventurous ride in last couple of months. Going ahead, where do you see Yes Bank, or what next for Yes Bank now?
So for Yes Bank, I think what we are aiming at, we would like to make it one of the best retail bank, and this retail bank would be definitely riding on its digital capabilities. And we would be today, our customer base is very small. We are going to ramp it up, and we are looking for a customer base of at least 1 crore. And all these customers we would like to acquire on the digital. So we would like to keep our cost under control, have more collaboration, acquire more customer. But the most important part would be offering the best products and the services to our customers on digital platform.
Uh, right, Mr. Kumar, thank you for that note and thank you for sharing your insights at Digital Money 2020. Thank you so much. And thank you, Digital Money 2020, for inviting us.
Yeah, thank you so much. Thank you so much, Amol, and thank you so much, Digital Money. Yeah.
Thank you, and
Mr.
over
Kumar.
to you, Shreya.
Thank you, Mr. Kumar, and thank you, Mr. Dete, for such a wonderful session. A special thanks to our gold partners, Visa, Freshworks, and AWS, our silver partners, Zeta and Paytm, and knowledge partner, PwC. Stay tuned for a lot more.